Now, I want to break this down into the mind. Actually, I've written them down somewhere about here because I don't want to forget. I mean, I'm going to speak from my head, but I'm just taking down some bullet points. So if you see me looking down here, it's because I don't want to forget anything. So, guys, let's break things down into my favorite. Let's start with my favorites. Like these guys. Anytime I look at these guys, and every time I click a buy or sell, I always make money. So let's start with the very, very best ones. So the very, very, very best forex pairs, and I feel these are the easiest pairs to trade. And I'm going to be explaining to you guys why I feel like they're the easiest and the best trades pairs to trade in a bit. But my favorites happen to be the Euro, GBP USD, and AUD USD. You see, these three pairs, you can almost never get it wrong. Now, why is that the case? Okay, so the very first thing is what they call liquidity. Okay, liquidity is basically the amount of money flowing through the market. Now, you have to understand that Euro USD, GBP USD, and AUD USD are all US dollar based pairs. Now, for the fact that they have US dollars attached to them, simply means that, obviously, for those of you who are new to the market, you guys probably know this or you probably don't know this, the US dollar is the global currency. Now, any forex pair that has a USD attached to it tends to have a lot of liquidity because it's the entire world is trading via US dollars. Now, you take a currency like the euro, you pair the euro, which is the second highest traded currency in the world. You pair both of them together, you have so much money going through this instrument as a whole. So it's the Euro USD. The second is GBP USD, and the third is AUD USD. So you see these three ones, they have a lot of liquidity. Now, how does this make me money? Okay, how does Dapo Willis make, guys? You see the euro, yeah? Oh my goodness. 2014, I made, that was my best trading year ever. The market was trending. I made so, how much did I make that year? Maybe, I think I was probably 22 at the time. 2015, this is 20, we're in 2022 at the moment. That was 7 years ago. So it's 20, whoa, I was 21. Guys, I made 250K pounds that year trading the euro. The setup was so simple. I'll get into that shortly. So because of the fact that we have a lot of liquidity in these three pairs, liquidity simply means, like I said, money flowing through these pairs. Now, for the fact that there's a lot of liquidity, simply means that a lot of people are looking, a lot of traders are looking at these pairs. Yes. Everybody is looking at the euro, everybody's looking at GBP USD, everybody's looking at AUD USD. Once again, how the hell does that help us? I'll tell you. Now, for the fact that everybody's looking at these three pairs, now you have to understand that the market moves based on mass human psychology. Yes, there's something called mass human psychology, meaning that if 1 million people are looking at a particular forex instrument, for example, and there's a particular resistance level, 1 million people are seeing it. 1 million people know it's a resistance level. So 1 million people are going to sell at that resistance level. And if 1 million people are selling at a particular level, best believe the market is going to drop. To summarize why I like these pairs, everybody is looking at them. And for the fact that everybody's looking at them, it makes it easier for you to read the patterns. The market always puts in patterns. The patterns are easier to read. And for the fact that the patterns are easier to read, it makes people like me, I mean, I'm just there saying like, oh my God, this is a support, this is a resistance level. Let's go, let's bang, click, 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 click. It's a lot easier for you guys to interpret. And another reason why I like these pairs is for the fact that it is a lot more difficult for market makers to manipulate the market, because you have to understand that there's a lot of liquidity, there's a lot of money in these pairs. So the market makers will need more money to manipulate those key levels. Meaning that if you're trading these top three pairs, you're prone to less stop loss runs. Stop loss runs are basically when you've predicted the market at a particular, you want to sell at a particular zone, and then you've hit your sell order, and then the market gets to your sell order, you jump into the trade, and then boom, stop loss. And then your stop loss gets hit, and then the market now drops back down and starts heading in your favor. That is known as market manipulation. You see, with the majors, They're actually called the majors. Yeah, let's use the right terminology. With the majors, it is a lot more difficult for market manipulators to manipulate the majors. Why? Because there's too much money there. They don't have enough money to manipulate, unlike those other pairs that I'm going to speak about later on, right? Where there's not that many people trading them. But with these big boys, it's a lot more difficult. So you are in safer hands, okay? You're in safer hands to trade these pairs. Now, guys, another reason why I love these three pairs is because it is a lot easier for me to analyze. Now, you guys know me, I like to trade the top-down analysis, which I feel is the best way to trade the Forex market. You see, because of the fact that the market respects major zones, the market moves from zone to zone, like it respects the key levels, it makes it easier for me to trade. Guys, let me explain something to you guys. In this game, we're not here to play who's the most intelligent trader. Nobody cares about who the most intelligent trader is. Everybody cares about how much money we're making. So our duty is to get in there and actually make money. So I would look out for the easiest pairs to trade. I will look out for the easiest setups to trade. I'm not here to draw my lines to look like this or to look like, no. I want to trade the most obvious setups. And trust me, guys, the Euro, GBP USD and AUD USD will give you the most obvious setups to trade. Now, guys, so that being said, what strategy can you guys then use to trade these three pairs that are the easiest pairs to trade? Now, guys, for those of you guys who've been following me the longest, I put together one of the most realistic approaches to the Forex market ever. It's known as the top-down analysis. This is basically when I go on higher time frames and I anticipate thousands of pips into the future, and then I scale down to lower time frames and I trade in the direction in which the higher time frame has told me to trade. Now, this is very effective and efficient because the higher time frame always paints the picture. If the higher time frame is saying I'm going to go south, chances are that the lower time frame will always follow suit in that direction. So there's something called the top-down analysis, which I teach on the Forex Mastery Program. And for the fact that the Euro, GBP USD and AUD USD have a lot of liquidity, you're able to interpret these patterns a lot better, obviously, with the knowledge from the top-down analysis and the Forex Mastery Program. Now, for those of you guys who haven't grabbed the program and you're interested in equipping your mind to trade the easiest pairs possible and make a lot of, guys, when I say it is so, once you learn top-down analysis, once you take the Forex Mastery Program, you will absolutely love the majors, because for every move it makes, what you learn on the Forex Mastery Program is actually very applicable. So you're literally just going to be seeing every movement like, even when the market is most likely going to be a losing trade. I speak about how to anticipate losing trades on the Forex Mastery Program on top-down analysis. You're like, I know you, I'm not going to trade you. Or I know you, this is going to be a home run. So like I said, the top-down analysis actually helps you project over 2,000. Guys, what am I saying? GBP USD just fell 1,000 pips. Yes, like 3 weeks before I recorded this video, we did an analysis with the top-down analysis and we projected over 1,000 pip drop on the GBP USD, even the Euro USD as well, and gold as well. So guys, trust me, with the top-down analysis, if you combine the top-down analysis with what you learn on Forex Mastery Program and these major pairs, you put them together, you will make so much money, you won't even know what to do with it. Once again, the link is always around here. So just click here, click the link down below, grab the Forex Mastery Program, and you're good to go. So guys, let's go into the second aspect of the pairs that I like to trade. So what's the next? Okay, so we're talking about the Euro, AUD USD, GBP USD. Let's go over to the other pairs that I like to trade, but I don't really trade that much. Let's go. So guys, the secondary phase of the Forex pairs and instruments that I like to trade, but I don't really trade that much, is commodities, right? So I have the majors, which are my best. Once I touch them, once I touch them, add my knowledge from top-down analysis and Forex Mastery Program, put them together, oof, I'm right 9 out of 10 times. I forgot to tell you guys how efficient that whole situation is. But aside from that, what is the next thing that I really like to trade? Gold. Yes, without any further ado, let's give a round of applause for gold. Now, gold, guys, gold, woof. 2018, I remember doing the top-down analysis for gold in 2018. Guys, I banked 5K, 2K, 7,000 pips over the span of what, 7 months, 8 months? Yes, so if you prorate that, I was making 1,000 pips a month. And obviously with the knowledge from the top-down analysis, I just simply went on a higher time frame. I saw the head and shoulder pattern. Module 5 teaches you this on the Forex Mastery Program. I literally just saw it, waited for the neckline break, and bam, this is exactly how I projected 5K pips into the future, put my first position in, and then as market went in my direction, added the second position, and cumulative, put them together, 7K pips. Now, why do I like gold? I just told you, it's easy to interpret as well. Let me give you guys a little secret when it comes to gold, right? When it comes to all these pairs I like to trade, you see me, I like trending gains. These things I just told you about. To summarize everything, don't tell anybody, guys. It's a little secret. They like to trend. And when they trend and they pull back, the pullbacks always work. I'll give you an example. Let's say the market falls like this, whoop, and it pulls back, whoop. See the spot when it pulls back? All you need to do is wait for it to start falling again. Sell, whoop. It's going to drop 9 out of 10 times. If you want to understand what I'm talking about more, top-down analysis to teach you, grab the program down below. But that's, by the way, simple. Once these pairs start to trend, you are going to make a lot of money. Now, another thing I need to warn you guys about is sometimes you can get into a trade with these pairs and the market might take a little bit longer for it to hit your target. This is exactly where you have to be patient. You have to be like, okay, you have to believe in your strategy. You have to believe in yourself. But guys, you see these pairs, they have never let me down. Gold, and one thing I really like about gold is when gold is ready to move, gold can drop 500 pips in a day. Easy, as long as you're on the correct side of gold, okay? And what I like to do with gold is I like to catch what they call falling knives. Like I said, the market needs to give us some form of a commitment. Market come now, whoop, pull back. Now, these pushes need to be on like a daily time frame. I can't really go into detail here because I don't really have time for that. I said this video is going to be 15 minutes, it's already 40 minutes. Jesus Christ. Let's carry on. Anyway, so gold is, like I said, if you can get it right, you get your analysis right, you will make a lot of money from gold. Now, I have to warn you guys, one thing about gold, you see, I always talk about the advantages and disadvantages. One of the disadvantages of gold is if you are caught on the wrong side of gold, it's going to burn you. So you have to be really careful when it comes to gold, and you have to calculate your pips and risk management and everything. You need to calculate it really well because the pip count on gold is huge, and if you're not careful, if you don't employ proper risk management, you can actually have your entire account wiped away like this. So ensure you do your pip, I think, what's the name of that calculator I use? Is on the Forex Mastery programs on the risk management module. Anyways, there's a link on the Forex Mastery Program. Forex Mastery students, I think it's under the risk management module. If you click the link, ensure before you ever trade gold, ensure to calculate your risk properly before you get into any trade. But that being said, gold is a fantastic pair to trade. It is my second best group of instruments to trade, and I feel you guys should be trading them as well if you want to make a lot of money. At the moment, which I'm recording this video, gold is ranging really badly. But I can bet you once the breakout happens, we're good to go. You make a lot of money from gold. And guys, see, I'm just sharing all my pairs with you guys that I like to trade. When you make money, you better open the GoFundMe and give me some money because, guys, I'm giving you guys free gems here, okay? Free gems here. So, guys, after this, I'm going to talk about, okay, one last one. All right, guys, what's the last one? Give me a second, guys. Give me a second. I wrote it down somewhere. Ooh! I almost forgot this guy. The S&P 500. As you can see, I'm making my way from Forex to commodities. Now we're into indices. Now, when it comes to S&P 500, I'm just going to be very straight with you guys. It's an index, right? They have various other indexes you can trade. There's the DAX, there's the this, there's the blah, 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 blah. Over the years, 11 years worth of trading, I'll tell you, the S&P 500 is the easiest to trade. As with everything I've told you guys here, I'm giving you guys the easiest ones to trade because we're not here to act like we're the best traders in the world, although I consider myself the best trader in the world. However, that's not the point. I'm here to make money, okay? So as with everything I've given to you guys today, I'm talking about the easiest ones to trade so that we can go and leave this video and go make money on Monday morning, right? So S&P 500. Now, what is the hack behind S&P 500? It's simple because the same strategies that you use for Forex, you can use for the S&P 500 as well. Isn't that really cool? Another thing I noticed about the S&P 500 is that it is always trending upwards. Yes. Forex Mastery students, if you go and watch the top-down analysis module on module 5 or 6, where I speak about obviously the top-down analysis, once you zoom out on the S&P 500 to like a monthly and a weekly time frame, you understand what I'm saying. Now, it is for the fact that it's always trending upwards. It's so simple. All you need to do with the S&P 500 is wait for the pullbacks. Okay, I can't share my entry strategy with you guys, but Forex Mastery students, you know what to do. Wait for the pullbacks into the trend line. Okay, when it comes down, use the Willis zone strategy, let it bounce. Done. And the good thing about the S&P 500 is once you get into the trade, you can hold it for a long period of time. Yes, because the market is always trending to the upside. Even when the market decides to retrace massively and starts to fall, you would always notice. I remember during the, I don't think I can use the word, you know, that 2020 when everybody had to wear like face masks, and you know what I mean, like, you know what I mean, right? That thing that came and everybody had to stay in the house. I can't use that on YouTube because they might ban my video. But during that period, right, the S&P 500 fell. Everybody was shouting, blah, blah. Guess what, guys? The S&P 500 fell. Everybody was shouting, oh, the whole world is going to a recession, blase, blase, blase. The S&P 500 fell. Guess where it fell into? Trend line and its major support level. Guess what happens, guys? When it came into that level, do you know what happened? It bounced back to the upside. I bought, and then the market went and rallied. So S&P 500, even if it's coming down, it will still go back up. What does this simply mean for all of us? Just wait for it to retrace into major levels. As it comes down, bounce it all the way, bounce it back to the upside, and then you have something like this. Like Michael Jordan, you know what I'm saying, man? This is S&P 500 for you. And guys, what year was that? I don't really trade the S&P 500 that much anymore because I like to focus on the major pairs. I like to focus more on Forex. But when it comes to the S&P 500, I feel like it's one of the